I want to bring in Dan Ives from Wedbush joining us to talk Apple as well as Tesla. We've got Tom White to do some trading here in the options side. Dan, welcome back to the show. Thanks for joining. I know I'm on Skype now too. Usually you're the one on Skype. Now we're together. So let's talk here. Actually, technically I'm not on Skype. I'm on something a little bit more high powered than that. Hey, first of all, you've got two notes out, but they both seem pretty ominous. You talk about dark clouds, dark times. I want to start with Apple first. How bad's it going to get, Dan?
I mean, look, when you look at Apple, I think it's really not really just about the supply chain, but demand. I think right now you could see iPhone numbers, based on what we're seeing from a demand perspective, could be down now about 14, 15% from our estimates, just given what we're seeing. And I think the 5G phones now get pushed to next year. And look, this is obviously a near-term economic apocalyptic state. And I think that's why right now, from our perspective, I'd rather stress test the numbers, kind of do a scorched earth type model and do the valuations off that and hope we're wrong.
All right, so you're basically going and saying, we're kind of plumbing the depths here, Dan, in terms of trying to figure out how deep this economic chasm is, right? And what do those numbers show you? I mean, walk me through what this scorched earth test tells you about Apple, because I thought I saw the other day from an Instinet analyst, they're saying iPhone sales in China only down 9%. That doesn't sound too bad.
Yeah, I think, look, I mean, in my opinion, and obviously going through, some very big shock events over the last 20 years covering tech stocks, what's most useful for tech investors, you got to take a glass half empty, how bad could it get? So in my opinion, 350 million of 925 million install base in terms of iPhones. We assume the next 2 years, the only consumers that buy a phone are ones that haven't upgraded in the last 42 months. So to me, that sort of at least stress has to put some goalpost. So we assume anyone that's upgraded their phone in the last 4 years does not buy a new iPhone in the next 2 years. And I think when you look at those numbers, you look at sort of what I view as a 250, 240 sort of worst case, best case, base case somewhere in the in the low to mid 300 range, and I think that is what helps investors most in these types of environments. You talk about China just down 9%. I mean, it's all relative. A week ago, I was going to the Big East tournament. Now I'm locked in my house and people wearing masks in the street. So I think you gotta just take a perspective where we are. Scorched earth the model, see where the numbers are, and when we do that, we still are bullish on Apple given those numbers and what I view as more Armageddon-like numbers.
Okay, so the part of Apple here that you're talking mostly is, of course, the hardware, the iPhone side, all important. But what about the push that Apple made over the last year to create an ecosystem of services that I could buy and I can purchase no matter where I am? Dan, if I got an Apple TV right now, I could download until my bank account is empty.
The biggest floor in the stock is services. Because even when I stress test the model, you still in a worst case have 55, 60 billion of services revenue in fiscal 2021. I think that's worth 500 billion on a floor. So I think the one that's important here, as much as we talk about services being the re-rating of Apple, in actuality, now what's happening is that services business is actually putting a floor on the stock in an ironic
I love that point.
twist.
It's so interesting, right? To your point, this was the sort of multiple expansion part of Apple, turning more into this kind of growth company again, but now it's almost acting like the sort of saving grace. I want to bring in Tom White here, who's going to do a little trading here. Dan, stick with us because, or Dan, real quickly, just the price target on Apple, just to confirm here. I mean, we're at 250 right now. I know you were very bullish on Apple, so you're still basically saying if you own it at 250, hold it, because your price target's still above 300 bucks.
Because I'm saying if you go under that scenario and you assume no one buys a phone that's bought a phone in the last 4 years, you're looking at what I view worst case 245, 250, base to best case low to mid threes. And to me, if you're able to hold it on the other side of this apocalyptic storm, then I think right now that's a name you continue to hold and own and buy.
Okay, let's come back to Tesla here in a moment. Tom White, join me. I like this because there's the word Armageddon, but we can still think about holding this stock if we've got the gusto to do it throughout this big valley coming up. So Tom, walk me through what options tell you on how to handle Apple right now.
Well, of course, we've got that higher implied volatility in there, Oliver. And what's setting up and what a lot of people are having trouble with is instead of going out and buying shares in an individual name, in this case, Apple, it's a capital intensive type strategy, right? So I look to the options market to maybe do something like a stock replacement. And the trade that I looked at today, based on what Dan even mentioned about that 240, 245 base case Armageddon type of result for Apple if nobody's buying a phone. And I went out to September. Should be the start of their super cycle into the 5G. And I'm buying slightly in the money call, the September 240 calls. And that takes the place of the stock. But on top of that, I want to take advantage of this higher implied volatility that we're seeing in the near-term option cycles. So I'm selling the March 27th weekly 265 calls against that. So it creates a long call diagonal where it's used as a stock replacement type strategy in the option market. And it's less capital intensive to take a neutral to bullish stance in Apple. You're paying roughly about $41 for that call diagonal. It's expensive, about $4,000 in requirement per spread that you do, but it's a lot better than paying the $24,700 that you're going to pay for 100 shares of Apple. So it's less capital intensive. You don't get to collect that dividend, but it allows you to take advantage of a grind back higher. And the apex being around that 265, but you got to break even about 240 to the downside on that, maybe even a little bit less, and you get to take advantage of rolling those short options over and over again, creating credits because of that high implied volatility, which reduces risk on the initial trade, but also increases potential profitability.
Okay, I like it. So you got to be ready to buy this thing if it starts slipping. You got to have the cash on hand. Tom, stick with us because we're going to come back to Tesla. Dan, I want to get your thought on Tesla real quickly here. You say that the 500,000 delivery targets they wanted for 2020, virtual impossibility in your opinion. The shares, of course, have cratered. But again, this thing went on such an exponential run. I don't know what to make of this, whether it was just going to happen regardless or if this is a real cause and effect based on the economic outlook.
Yeah, it's a real cause and effect. I mean, I think, look, they were well within reach where they could have been on that 525, 550 path for this year. The reality now from a consumer perspective, I think those get cut by about 25%. Remember, production's another issue, as we're seeing not just Tesla, but obviously GM, Ford closing in Detroit yesterday. And this is just another one of those near-term 3 to 6 months. I'd rather do a scorched earth model, see what the numbers look like. What do you think? And I think when you look at that, this is a company that if you're able to navigate on the other side of it, I think they still are on that trajectory into next year where they could start to see that sort of springboard growth. That's why we lowered our price target to 425, just given demand and delivery. And it just comes down to what the average consumer focused on their health, grocery, and hand sanitizer and not focused on Model 3.
Yeah, no, I feel you on that. All right, $425. It's a big drop in the target, but again, we still have about $30 to go. So if you got it right now, Tesla, according to Dan Ives' revised price target here, close to where it should be. Dan, appreciate you joining us. Love the insight. I think it's a really good take here. The scorched earth model, so trying to figure out worst case scenario. Dan Ives from Wedbush. Tom, we got one more trade. Hit me with Tesla real quick. We only got about 60 seconds.
Yeah, so with that in mind, people pulling back their estimates on Tesla, who's going to be buying a car, right, in the next 3 to 6 months? It's a big outlay with all these job losses. So I looked at something above where the current share price is trading, about $455. That's above Dan's price target, and selling a call vertical because I want to stay risk defined in this type of environment. And I'll sell the 455, 460 call vertical, and I'm collecting roughly about $2 credit on that, Oliver. Takes my break even up to about 457. Really simple option strategy to take advantage of that higher implied volatility that we've seen in the overall market while taking a directional bias. Now, you win in 3 out of 4 scenarios on this, right? If Tesla remains where it is, falls, or rallies but stays below that 455 strike, you still profit in those, and you've got a high probability of success of over 70% that Tesla does remain under 455 until expiration. And these are the April options. So you've only got about 30 days in this trade.
Okay. Tom, like it, like the trade. Think it's appropriate given what we're seeing. The big drop in the shares, volatility across the market still remains high. I guess the one thing about Tesla now is it used to be an outlier for vol. Now it's just another stock. Tesla right now, it's okay. It's holding on today. It's up about 9%. And Apple too is holding on as we see little change moves in Apple. 1 point green this morning. Thanks again to Dan Ives. Thanks to Tom White for the trade.